So yeah, the reason I want to talk about this is because we are now in a situation where banks, billionaires and countries are all racing to set up their own version of a Bitcoin or Ethereum ETF, right? And so we're all sat there thinking, oh, trillions is about to come flooding into the markets. And although that may be true to an extent, it's actually a much bigger deal than you think. Because if, like I've said that, you know, the total crypto market cap could or should be anywhere between $4.5 trillion to $12 trillion by December 2025, right? That's sort of my bit of a cop-out sort of range of where we're going to be. But you would be incorrect in thinking that, let's say it is $4.5 trillion market cap, there isn't $4.5 trillion of actual cash sloshing around that system. So in any market, whether it's stocks, commodities, bonds, or crypto, there's far less actual capital in that system than whatever the reported market cap is. And so once you understand that relationship between inflow multiplier, you realize things are actually a bit more bullish than you think. And that's why markets tend to blow off a lot more. I'm just going to shut the door. There we go. So back in 2021, the Bank of America came out and said that Bitcoin is really easy to move because the inflow multiplier is so high. And they calculated that at that time, for the market cap it was back then, $93 million of new inflows, that's the key thing, new inflows, would move the price up by 1%. $93 million is chump change for the big boys and girls out there. So that's quite interesting. And so in that report, they basically said that the Bitcoin multiplier is 118. So for every $1 of new capital flowing into Bitcoin, it increased the market cap by $118. So you're probably thinking, I call bullshit. This is everywhere. So companies do this all the time. Whenever you hear of a company valuation, just say to yourself, bullshit. That's every time I see a valuation of a company, it's bullshit. And the reason why is because you can hack company metrics so very easily. So for example, let's say I set up a brand new company and it's got 100 shares. Now typically when you set up a company in the UK, the default is 100 shares at £1 a share. So you have a starting pot or capital or equity of £100. Not that most people put in 100 quid. But now let's say I sell 20 of those shares for £50,000. So we've all seen Dragon's Den or Shark Tank. They come in, I'd like a £50,000 investment for 20% of my business, or something like that. Now, if you watch, next time you watch Dragon's Den, watch all of them scribble down. Whenever they get to the finance part, they all start quickly working out what the company valuation is. And the way you do that is you simply go, right, 50k divided by 20, that will give you the amount per share. So in this case, it's £2,500 per share. Therefore, you do that times 100. And what do you know? The moment you accept that 50k for 20% or for those 20 shares or 20% of the company, technically your company is now worth 250 grand. So every single time you see in the news or the papers, this company is valued at blah, it's bollocks. It's because someone's just done a cap raise. And so this is how you can game sort of the PR. So what happens, especially in the tech world over the last 20 years, is that a startup will come up, or they'll start, they'll be in stealth mode whilst they're building bits and bobs. And once they realize they've got a product market fit, they'll then start the fundraising part. And so they'll get some seed investors and at a relatively low amount, and that will give them sort of an initial valuation. So, this new startup's now worth $10 million because someone put 50 grand in for 1% or, something like that. And then what happens is they want to get on the radar of other investors, the bigger fish out there. So what they do is they then get another investor who they've pre-approved or, they've pre-arranged to come in and invest a chunkier amount for maybe a smaller amount of equity. And that all of a sudden boosts the valuation of the business to 20, 50 million pounds. And that is the talking headline you see in the newspapers. Local Norwich boy has a business of £100 million or whatever, and that's simply just PR, just because they're after the bigger fish. So that way they can say, hey, when they're reaching out to other VCs, private equity firms, angel investors, they've got the foot in the door. When they're trying to get that meeting, it's like, we're here, and here's this article, or whatever. So this has happened since humans set up companies, hundreds of years ago. So it's everywhere. And it's even worse in crypto, believe it or not. Quelle surprise. So when you see things like Elon is worth $250 billion, do you think he's actually got access to that money? No. I mean, he will, even if he wanted to, there's no way he could even touch even a quarter of that, because all of that equity is his Tesla and SpaceX stock, and Neuralink and Boring Company and all the other bits and bobs that he's got going. So let's say it's all in Tesla and SpaceX. The moment he started dumping shares to try and crystallize that net worth, guess what would happen to the share price? It would just dump. And therefore, he wouldn't even get a fraction of that. So every time you see a billionaire worth X amount, bullshit, that's not cash. Most of them have very little cash. So how does this work with crypto? And this is why tokenomics is so important with crypto, because it actually helps you in other areas of finance as well. So let's say we have some magic commodity, some rainbow nugget, and and we've got random people, 5 random people. And let's say they all wanted this random rainbow nugget, and the going price is $1. Okay, so they all buy a rainbow nugget for $1. And it just so happens there is some stash of rainbow nuggets that can't be accessed. So the equation that I've harped on for years, the easy way to remember tokenomic equations is more patience, Kryptonians. And this is the old physics trick I learned at school, where any equation whatsoever, you put it in a triangle like this. And then you can work out, if you want to work out the market cap, it's price times circulating supply. If you want to know the price of something, it's market cap divided by circulating supply, etc., etc., etc. So more patience, Kryptonians. Market cap divided by price times circulating supply. So in this case, what is the price? Is $1, and there's 10 nuggets in existence, or in circulation. And therefore, the market cap of the rainbow nuggets is $10 in this simple equation, okay? And obviously with crypto, it's a bit more dynamic because you have, emissions every day, or you can have a deflationary or an inflationary supply, and obviously there's inflows and outflows all of the time. So imagine I'm just taking a screenshot or a snapshot of this asset, $10 market cap. Now, even though this 5 nugget pot is not out there to be bought, it's technically still there, it's in existence, it's in the supply, so you still have to count it. Because then you have real circulating supply, that's another metric. So in this case, there's only $5 of actual money that's been injected into this system, yet it's got a $10 market cap. So already, right now, this is the new inflow multiple is 2x. So quite a very low multiple here. Now let's start flipping around some things. So let's just say Michael Saylor comes along and he goes, I don't like Bitcoin anymore, I want these rainbow nuggets. And he goes, right, I'm going to try and corner these rainbow nuggets. And he buys a nugget from his buddies. Oh dear Lord. So he buys, and obviously they don't want to let go, so the price has gone up. So he's paid $1.50 for these 2 nuggets. We can do the same equation again to figure out what the new market cap is. So the price is now $1.50. There's still 10 in existence, so the market cap is now $15. But what's the new inflow? $3. So $3 come in, and it's increased market cap by an extra $5. So the multiple's actually decreased here. It's now 1.67. And by the way, there are loads of different multiples and metrics, right? This is the simplest one that you really, this is pretty much the only one you need to sort of understand when it comes to Bitcoin and crypto. So let's tweak this situation again. So over here, we've got someone who's quite angry because he realized he was an idiot and sold pretty early. And so he's unhappy, sorry. And he's got his eyes set on that nugget over there. And he's like, I'm going to have that nugget no matter what happens. So what does he do? He buys it at an extortionate price. $3. So the price has doubled because this person was like, ha, sucker. So this person is Harry. He's taken profits. And no, smart. So what's the new equation? The price is $3. There's still 10 nuggets in existence, so the market cap is now 30. Now the inflow multiple is 5x. It's gone up. It's not crazy, but look at that. The real amount of inflow increase in market cap is a lot. So there's only an extra $3 coming in. But what was it before? It was like $15 market cap. And not long before that, it was $10 market cap. So when you start adding all these little inflows, this market cap eventually turns into some beast. Bitcoin's like, almost $1 trillion market cap. Is there that much money sloshing around there? No. Is there more inflows inbound? Or are there more inflows inbound? The answer is 100% yes. That's not hearsay anymore. That has always been speculation for the last 18 months, that Vanguard, BlackRock, Fidelity, they're going to launch an ETF. And it's like, yes, of course they are. Now it's like, hurry up, Gary Gensler, just get fired or piss off, please. He'll no doubt just walk into some cushy job at BlackRock, probably. It's that revolving door. I call it government Sachs, because if you look at the Treasury cabinet in the US, it's always ex-Goldman Sachs. It's this revolving door, of crony capitalism. Anyway, Jabba the Hutt comes along and goes, I want me some nuggets. And this is BlackRock, by the way. They've seen this brand new nugget ecosystem. They think, oh yes, the public are obsessed about these nuggets. I want some rainbow. But the thing is, this is gone because whoever created this rainbow nugget system has disappeared. Those 5 nuggets are not out there circulating. Satoshi Rainbow Man has lost the private key. And we've got Bitcoin Jesus over there who's not, or Nugget Jesus, who's not releasing his nuggets or her nuggets. So in real circulation, there's only 2. So Jabba can really only gobble up these 2. So all of a sudden, Jabba goes, well, it's not my money, it's taxpayers' money and whatnot. I'm just going to buy at whatever price because I want these nuggets. So they sell out. See, Harry only sold out for $3. Sorry, that was my last little thing. We love each other. So I'm just bitter because he's better than me at COD. So, so now we've got $20 of new inflow. So now the market cap is $100. Now, the multiple isn't that exciting. It's still, $20 a new inflow, and the market cap's gone from 30 to 100. It's only 70. So the multiple in this orchestrated situation is very low. But the amount of money that it's gone up in real terms, it has just shot up. So my analogy here with Bitcoin is that, yes, we have diminishing returns with Bitcoin because it's now the oil tanker of crypto. And yes, it's not going to perform as well as it did in the 21 cycle, the 2017 cycle. But if you look at it as raw market cap, it's going to dwarf every other cycle that's ever existed, in my opinion. Come back in 2 years and we'll see if I'm right or wrong. But I genuinely believe the market cap of Bitcoin is going to increase more in this cycle than it has in its whole life. Same for crypto as well. The retail market, we peaked the total crypto market cap a smidge above $3 trillion. Just us plebs. And now we've got banks, billionaires and countries flooding in, and it's not their money. So when we're investing in crypto, it's our hard-earned cash, sweat, tears, time and talent that we've poured in to earn the money, crystallize it into fiat and then put it into crypto. So it's an emotional thing for us, right? When these corporates come in, these institutions come in, it's not their money, they don't give a shit. So they don't really care about the price too much. It's all about sustenance of their power and control structure. So let's look at an extreme example in crypto right now. And this is Bittensor, otherwise known as Tao, or Tao, whatever. I always sing that song, Teo, when I see this. But So the other day I was looking, for disclaimer, I don't own any Tau. I've looked at it for the last 6 months. And I've been constantly flip-flopping. Is it a scam? Is it bullshit? Is it Ponzi? Is it overhyped? Is it blah, blah? It is like the most confusing project out there right now to properly understand. Because, unless you're a mathematician, you read the white paper, you see all these algorithms and equations, you're like, I'm too stupid. And then you move on to bits that you do understand. So I've gone through the white paper and I've just spent hours copy and pasting stuff, putting it into ChatGPT and Google Bard and going, treat me like a 5-year-old, what the hell does this mean? And then you come up with bollocks answers from the LLMs. So I'm still doing it. But anyway, it's been on a meteoric rise, right? It's gone from a bugger all market cap when I started looking at it to just under $1 billion. The interesting thing, however, is the order book. You can pretty much only buy Tao on, or Tau, however it's called, on Mexi, right? So we can ignore every other exchange, just look at the Mexi order book. So at the point of me screenshotting this was yesterday, this order book. Now I mentioned this on the trading pub the other day, so non-RT people here, please be quiet. For the newer people, when looking at this order book, what slaps you in the face? Because it should be a face-slapping realization here. Anything in particular that slaps you in the face? I'm not exaggerating, my jaw literally dropped when I saw this order book.
Is it that it's not going to take too much money to move the price up massively?
Bingo. So look at this. Mexi is pretty much the only place you can go. So if you're buying Tao, whatever, that means you have to buy it from people that are selling. Okay, so whenever you're looking at the order book, you have to look at the opposite side of what you want. So I'm buying, so you've got to look at sellers. Let's say you've got $50,000 of Tao you want to buy. Okay, so straight away you're going to gobble up the 170. Or so obviously I've zoomed out, right? So you can toggle this thing and zoom in, right? But you're going to gobble up this $30,000 worth of 170. And then you're going to start nibbling at, sort of the high 170s into the 180, right? So that's fine if you've got a relatively small amount to pump in. But let's say you're a different person. You've now got $1 million that you've allocated into Tao, and you now it's not a case of, right, I've made my decision, I'm going to put $1 million in. It's then an execution play, right? There's lots of different types of trading, but you have to go in order. You do the research, etc. But then when you've decided you want to get into something, then you're in the execution phase. Do you get in all at once? Do you phase in over time? Do you wait? It's all, execution. At £1 million, you're like, okay, and this is cumulative, you'll gobble up the whole order, literally the whole order book. Now, I said $1 million because, this is very dynamic. This is ebbing and flowing. There's lots of people looking at it that haven't broadcasted their entry orders and sell orders. So as you start gobbling up prices, other people start selling and taking profits and all that sort of stuff. So 698K to push the price up from 167 to $330. I was like, holy shit, even I myself could play with this like a baby seal and slap it around if I wanted to. If I wanted to be a negative actor. Because there are easy ways that I could pump the price up and then dump it easily. And then pump it up again and then dump it. And there's lots of negative actors out there with far greater pots of money. So let's just say you had £1 million, just to account for the dynamic aspect of the order book. £1 million would push the price up to $330. Now, going back to the execution phase, you've got to be very careful because the way to do it is basically slowly accumulate a relatively bit, like at least half of the pot over time at the cheapest prices possible. And then when you really want to pump up the price, you save the other half for the pumpage to really start escalating it. And then what happens is the retail market comes in and goes, ooh, we're booming. Little do they know that there's just some troll behind the scenes or, playing with it. And when the retail hype starts coming in and go, oh my God, every YouTuber is now talking about it. Oh, Tao, buy Tao, supercomputing. That's when you dump, right? That's when you dump. That's why you should always try and dump into green candles, never dump into red candles. So that is what shocked me. We have this thing which is hitting the internet by storm, yet it's built on a bloody foundation of sand, whatever that Anchorman reference is. What was that Anchorman reference? Your lies of nothing. Oh, I can't remember. Anyway, So what is the market cap? It's 300, so if I were to do that, $1 million inflow would push up to $330 times the circulating supply. Oh, that's the other reason I was like, oh, 21 million total supply, but there's only 5.6 million out there right now. You've got a lot of emissions about that you have to wade through. Not good from a tokenomics point of view. Anyway, but look at this. By pushing up to $330, you are moving the total market cap from basically just under $1 billion to 1.865 billion. So this is the most, as I said, the most extreme example. A $1 million inflow right now would push up the market cap by almost $1 billion. And I'm a simple Norwich boy. If I'm seeing this, who else is looking at exactly the same picture? I'm sort of tempted to do it myself, to be honest. So, yeah, but it's, in conclusion, all the numbers you see on the internet are bullshit. No, when it comes to market cap, that is.